Okay. And in terms of your style, how does risk management factor in, especially for stocks that you're looking to come down in price? How do you keep yourself safe to make sure that you're not catching, say, a falling knife or something like that? Can you talk a little bit about how you've set up certain rules or procedures to keep yourself safe within your style?
Absolutely. Great question. And and funny you mentioned don't buy a falling knife because that's what kept me from dip buying in the first place. That's what kept me from dip buying because everyone says don't buy a falling knife, you know? And so for me, I'm like, okay, I'm not. And that made sense to me too. I'm like, oh, it's going down. Definitely don't buy that. Right. Totally made sense to me. For too long, that's what made sense to me, I guess you could say. And so it was always that, it was always buying strength. It was always buying through high a day. It was always buying breakouts, it was always into resistance areas, for breakouts. And it really wasn't until Tim Grutani's guide where I started thinking differently. I'm like, you know what? Let's not even buy a breakout even necessarily. Like those, everyone knows breakouts are so difficult. Breakouts are the most, in my eyes, and we're talking risk management here, but we're also talking trading psychology. They're the most crowded. They are the most volatile psychologically. When you're talking chart psychology and market psychology, it's the worst to me. You got shorts getting squeezed who are freaking out, but you have new shorts waiting to, bash at it if it's going to fail still. You have all the worst traders in the whole world trying to buy it, all the noobs. That's all they know. It's okay. I get it. That was me. That's all they're going to do. They're just going to chase that, right? They're going to try to buy those. And then when it goes inevitably back under the breakout level, if you haven't risked that level and you found some other level, all the noobs who just bought are going to panic. A lot of people are risking the breakout level. New short step in. It's just so volatile. So how am I supposed to have good trading psychology or good risk management when this also may be the top as well? That's the whole thing. If this breakout fails, it's a failed breakout. We're buying the top right now. So, and that's kind of all anyone teaches, I guess. Breakouts of certain levels always. And these days, with algorithmic trading, especially, I don't care what the breakout is. If it's a ascending pendant flag, what, any of the, cup and handles and all the patterns and stuff that humans like to play, they're gonna stuff them too. And shorts know this and longs know this. And then sometimes, not longs, but shorts know this. And then sometimes too many shorts step in and they squeeze now, or whatever. The algorithm is going to squeeze it or whatever. So that's what I try to keep in mind in terms of the risk management for buying micro cap and small cap stocks. It everything I do is for that. Okay. Everything I do is for that. So buying lows, that's pretty much bread and butter on gappers. I'm not chasing them ever. If I can't find the good reversal off the lows where all the shorts saw that bottom also, and if you're short, you know exactly what that means. It's wicked out through lows, maybe. I like to, especially these days, watch levels test. So if I think I see low a day, I want to see it test low a day. And I want to know that shorts are sitting there watching that test. And that's why I've called myself a short bias long trader, because when I'm watching price action in the morning, I'm watching it from the lens of go down further, please go down further, please go down further. Who else does that? Short sellers. That's the same mentality. So I put myself in that mentality. And then when it's not going down further, that's when I start to get interested in my long. And they've become for me somewhat predictable. It's just a matter of when they're gonna do it, and if they're and then the magnitude in which they reverse. Okay, so all of that, the lower it goes, the less risk for me. The less risk for me. And I want it to go lower. There's of course lines where price action's dead and stuff like that in my eyes, of course. But if I still deem the stock to have some sort of value left and bounce and shorts who are still there, essentially, is what this means to me. Then it becomes a very simple trade, which is price targets. And I am a big advocate of that because psychologically, if I have targets, I can execute, right? If I don't know where I'm going to sell it, how am I selling it and where? You're just trying to magically see the top and trade level two or something, in my eyes, whole dollar levels, I guess you can use, but that's been the mentality. It took a really long time to get all the way to what I do now because it doesn't seem possible at first, like you look at the charts, where you can make the most money if you look at it, both sides at the end of the day. The problem is in real time manifesting that. So there's a lot of creativity involved too, you know, to be long. where shorts are just waiting for levels to, hopefully you're a good patient short and you're waiting for those levels that you need to hit, you know. For longs, it's a lot, for me at least, it's a lot of adaptability, a lot of discretion, um, and then a lot of trying to figure out what's going to move next and how it's moving, how algorithms are moving, the big volume stocks, um, all the different variables right now. So